Hello there. Good evening. It is a pleasure to welcome you to the revision session on the Joy Learning channel, where we always learn with so much joy and passion. This is going to be another beautiful session, and I am so glad to be your facilitator for tonight. My name is Madam Judith, and when you see me on your screens, you should know what time it is. It's time for cost accounting. If you are watching me tonight, probably you may be in your final year, and my job tonight is to guide you through some points as you prepare for your examination. In some few weeks, you will be seated in the exam hall and write your final exams. So tonight, join me as I walk you through payroll accounting. We are going to look at how best we can prepare payroll for an employee in an organization. Let's look at our objective for tonight. By the end of today's lesson, you should be able to define payroll. You should also be able to prepare a payroll voucher for an organization for a particular period. And you should also be able to solve likely examination questions. You can also call in with your questions and suggestions as we begin the lesson on 030-2211-698. 030-2211-698 and 030-2211-699. I take it that again, 030-2211-699. You can also join us live on Facebook at Joy Learning TV, on Facebook at Joy Learning TV, on IG at Joy_Learning TV, and then on Twitter is also at Joy Learning TV. Let's get rolling. Payroll accounting. When you hear payroll accounting, what comes to mind? I know most of you, we have done this in Form 2, and we already have an idea what payroll accounting. If you are new to the topic too, don't worry, we will do justice to it and make you understand what payroll accounting is. When we say payroll, it is the wages sheet prepared to analyze payments made to all workers within an organization for a particular period or month. Payroll is the wages sheet prepared to analyze payments made to all workers within an organization for a particular month or period. Question: distinguish between payroll register and a pay slip. Distinguish between a payroll register and a pay slip. When we talk about payroll register, what comes to mind? It is a list of all employees in an organization indicating their basic pay, their allowances, their bonus, if any overtime, their gross pay, all deductions, and then their net pay, which most at times we hear our parents say our take-home pay. At the end of the day, what is the amount of money I'm earning? So a payroll voucher or register is for an organization indicating all the employees in the organization with their basic pay and then their net pay. But the pay slip is extracted from the payroll voucher or payroll register. The pay slip is given to the individual employee in an organization. The voucher is for the whole employees in an organization, but the pay slip is for the individual employee or worker in an organization, which indicates the basic pay or the net pay that particular worker has earned. So that is the difference between the payroll register and then the pay slip. We also have the pay slip and then the pay-in slip. Most students, when we are asked to differentiate, we confuse ourselves with the pay-in slip, and then the pay-in slip is used at the bank to deposit money. When you enter the bank, I know most of you by now you are beyond 18, so you've been going to do some transactions in the bank. When you enter the bank hall, what you enter your details, the name, the amount, and you sign to deposit your money is the pay-in slip. So don't let us confuse ourselves with the pay slip and then the pay-in slip. The pay-in slip is used at the bank to deposit money, and then the pay slip is used or given to an employee at the end of the period or month, indicating his or her earnings at the end of the period. Let's look at some terminologies under payroll. We have done this during our previous revision session, so I will just go through briefly so that we understand the terms used in preparing payroll. This will enable us to understand when we are preparing the payroll voucher or register itself. Payroll register or voucher is the first terminology, of which I've already explained as the list of all employees or workers in an organization, indicating their earnings at the end of the period. The payroll register or voucher is the list of all employees in an organization. It is extracted from the payroll voucher or the payroll register given to employee at the end of the period, which indicate the amount they have earned at the end of the period or the month. Then we have the basic pay. The basic pay is the actual income that an employee earns in an organization, depending on which method of labor remuneration that is used in the organization, whether it's the time rate method or the piece rate method. If it's based on the time rate method, then we have to multiply the time the person spent on the job by the rate that has been given by the organization. And if it's based on the unit produced, then we are going to multiply the unit produced by the rate stated by the organization. So the basic pay is the actual income an employee earned at the end of the period or at the end of the day. Then we have allowances. Allowances are given to all employees in an organization to entice them to work harder to achieve greater results. We have some organizations giving their employees rent allowance. Some go as much as to receive transport allowance. We have cloth allowance. So these allowances are given to employees to add up to their basic pay, and this will increase their amount of money they are earning at the end of the period. So you may earn 1,000 at the end of the period by your grosses that have been given to the employee or worker in an organization. So if there is any bonus, if there is any overtime, if there is any allowance, it is added to the basic pay to get the gross pay. Some of the allowances are taxable, some are also non-taxable. So an organization may give his or her workers an allowance of 1,000, but may state that this allowance is non-taxable. When it's non-taxable, it means I'm going to enjoy the full amount that has been given me. But if it's taxable, it means I have to pay tax on that allowance given me. So gross pay is a summation of your basic pay plus all allowances. And if there is any bonus or overtime, we still add them to it to arrive at our gross pay. Then we have taxable earnings. Taxable earnings is that part of your gross pay that is subject to tax. We may earn a gross pay of 20,000 Ghana cedis, but that 20,000 cedis is not the whole sum that we have to pay tax on. Government have this statutory deduction called Social Security Fund. And with this Social Security Fund, we don't pay tax on it. It is mandatory for each worker to contribute that amount of his or her salary to the SNET, so that when you go on retirement, you can enjoy such deductions that have been made on your behalf. It's for your own good. So with that Social Security Fund, we are not supposed to pay tax on it. So before we can pay tax to government, we are supposed to deduct that Social Security Fund from our gross pay, and then the balance is what we pay tax on. So that amount of our gross pay that is subject to tax is what we are terming as taxable earnings. Then we have deductions. Deductions are all deductions or whatever we take from the gross pay before we can get our net pay. It includes statutory and non-statutory. we have statutory deductions and non-statutory deductions. The non-statutory deductions are not backed by law. It's not compulsory. I can decide to join the staff union and pay dues. I can decide to go for salary advance. It's not compulsory or it's not backed by law. But with the statutory deductions, it is backed by law and compulsory for every employee or worker in the country to pay. When you get a gross pay of 100 cedis, it means you are supposed to pay a tax to government, which is compulsory. If you don't pay tax, you can be sued for that. So it is compulsory for every citizen in the country to pay tax. So the statutory ones are backed by law, and it includes the income tax. We know income tax is payable by every citizen in the country. Then we have the Social Security Fund, which is also compulsory because it's for your future sake. So you are supposed to pay that percentage. Your employer have to pay the 13.5% on your behalf, and you as the employee pay 5% for your own good from your basic pay. So we have deductions which can either be statutory or non-statutory. Then we have the net earnings. The net earnings is what we finally take home at the end of the period. So as a student, you can go and ask your mother or your father, "Daddy, how much is your take home?" And I'm sure your daddy will understand. Or, "How much is your net pay?" The net pay is your gross pay lessing all deductions. So if my gross pay is 1,000 Ghana cedis and my deduction is 200 Ghana, then my net pay will be 800 Ghana. So I may earn 10,000 Ghana cedis. By the end of the day, I may not take home the 10,000 because there are some deductions that have to be made to arrive at the net pay. So these are some of the terminologies under payroll accounting. We have done this during our previous lesson. That is why I have just pointed them down to explain them to you. So we will take a question to illustrate how we can prepare a payroll accounting. So with the first illustration, we are looking at where allowances given to employees are taxable. Then our next one will show us where allowances given to employees are non-taxable. So let's get rolling. As a business guru, I believe we all have our calculators, our books, and then our pens ready. I'll leave the question on the screen for some time as you go through it. Then we all start the calculation. So for some few minutes, just get the question. If you want to put it down, quickly do that. You have just a few minutes to do that. Then we can all start and see how we can prepare a payroll for an organization. I believe we've all gone through the questions, so let's get rolling as we see how best we can prepare a payroll for an organization. So we have 4 employees in an organization. The following data relates to Seekers Limited for the month of June. Employees are Nelson, Edem, Odro, and then Palm. And we can see the hours they all worked. the rate per hour, and then the bonus that was given to them by the organization. The additional information: rent allowance is 15% of basic wage. The Social Security Fund contribution is 5% and is very silent. Anytime you see Social Security as 5%, you should know that it's always calculated on the basic pay, unless the question tells you to calculate it on the gross pay. Always calculate your SSF on your basic pay. Then workers' union dues is 2% of basic wage. Provident fund contribution is also 5%. Income tax is 12.5%. You are required to prepare payroll for the month, showing A, the basic wage, B, the gross wages, C, the taxable income, D, the total deductions, and E, the net pay or wages. So if you are ready, I'm also ready. Let's get rolling as we see how we can prepare the payroll for Seekers Company Limited. So we have Seekers Limited payroll for the month. All right. Okay, so we have the first column. As employees. And the second column will be the basic pay. We go for a break and we come back. We see how we calculate the payroll for the month. Okay, so welcome back from the break. Before we left, we were looking at how to prepare the payroll for an organization, and we have the question on our screens. We are starting with Nelson, who worked 45 hours at a rate of 60. So his basic pay will be 45 multiplied by 60, giving us a basic wage of 2,700. So we indicate that on our worksheet, 2,700. Adam's basic pay is 45 hours at a rate of 40. So that will be 45 multiplied by 40, giving us 1,800 as Adam's basic pay. We have 1,800. Then Odro's basic pay, he worked 35 hours at a rate of 60. So we have 35 multiplied by 60, giving us a basic wage of 2,100. Then the last employee is Pam, who worked for 50 hours and the rate was 40. So we multiply the 50 by the 40, giving us a basic wage of 2,000 cedis. Now he has been given, or all the employees have been given, a rent allowance of 15% on basic wage. So we are going to calculate 15% of each of the employees' basic wage. So we start with Nelson, whose basic wage was 2,700, and we multiply by 15% for the rent allowance, giving us 405 as his rent allowance. Adam, 15% multiplied by 1,800, giving us 270. 207. Then Odro's basic wage is 2,100 multiplied by 15%, giving us 315 cedis. And the last employee is Pam, whose basic wage is 2,000 multiplied by 15%, giving us 300 cedis as his rent allowance. Now we have their bonus, and the bonus has been given. I will have to fix it somewhere. Bonus of 650 has been given to Nelson, and then Adam 600, Odro 440, and then Pam 700 cedis. So we have to indicate that we have bonus, and bonus is 650 for Nelson, and then 600 for Adam. We have 650, 600, 440, and then 700. All right, so we want to know the gross pay, and the gross pay is a summation of the basic pay plus allowances plus the bonus. So we have gross pay, and that is the summation of basic pay, rent allowance, and the bonus, meaning the rent allowance and the bonus are all taxable. So we have 2,700 plus 405 plus 650, giving us 3,755 for Nelson. For Adam, we have 1,800 plus 207 plus 600, giving us 2607. So for time's sake, I will take the first two employees and indicate or show how we are going to calculate for their taxable and income tax. Then I'll leave the remaining two employees for you to work them out. So let's look at how we can calculate for the SSF of an employee. So we have the SSF, and SSF stated in the question was 5% of the contribution, and I mentioned earlier that SSF is always calculated on the basic earnings of an employee, not on the gross pay, unless the question tells you to calculate the SSF on the gross pay. So SSF is 5%. We are going to calculate 5% of the basic earnings of the employee. So we take Nelson. Nelson earning is 2,700 multiplied by SSF of 5%, which gives us 135. And then Adam, we have 1,800 multiply by 0.05, giving us 90. Okay, so before we can get the taxable income for both employees, we have to deduct the SSF from the gross pay. So we have taxable income, and the taxable income, as I said, the statutory deduction, which is the SSF, need to be taken from the gross pay, and the remaining is what we are going to pay tax on. We don't pay tax on SSF, so we always have to take it out from our gross earnings. Then we can calculate income tax on the part of our gross pay that is subject to tax. So for Nelson, we have 3755 less SSF of 135, giving us 3620. And then for Adam, we have 2607 less 90, which is the SSF, giving us 2517. So that is the part of the income of the employee that is subject to tax. We are not going to pay the income tax on the gross pay, but we are paying the tax on the taxable income. That is the part of the gross pay that is subject to tax. Income tax was given as 12%. 12.5% of the taxable income is charged as income tax that will be paid to the government. So we have 12.5%. Multiplied by the taxable income of the employee, which is 3620, giving us a tax of 452.5. And then Adam, taxable income is 2,517, multiplied by 12.5%, giving us an income tax of 314.62. As I mentioned earlier, I'm doing the first two employees so that you follow, and then you can continue with the other two employees. We have workers' union dues, which was also given to us in the question. It said workers' union dues is 2% of basic wage. So we take the basic wage of each employee and calculate 2% of it as their workers' union dues. So 2% of each employee's basic pay. So Nelson basic pay is 2,700 multiplied by 2%, giving us 54 as contribution to workers' union dues. Then Adam, we have 1,800 multiplied by 2% of his basic pay, giving us 36 cedis. Now the Provident Fund is also a deduction, and we've been given the percentage to calculate. Provident Fund is also 5. And once we have already calculated SSF, which was 5%, we can just transfer what we had as SSF to PF, because Provident Fund is also 5%. So let's do that quickly. For Nelson, his SSF was 135, which was also 5% of basic pay, and then Adam is also 90, which is 5% of his basic pay. So we transfer the 90 here. Now, how do we get the total deductions? As I mentioned earlier on, I told you the deductions are all subtractions or deductions we make from the gross pay before we can get the net pay the employee is supposed to take home. So we can see that SSF is a deduction. Then we have income tax as a deduction, and we have workers' union as a deduction, and then PF also as a deduction from the gross pay of the employee. So we add all these four deductions to give us the total deduction. So For Nelson, SSF was 135 plus the income tax of 452.5 plus the workers' union dues of 52 plus the provident fund of 135, giving us a total deduction of 774.5. Then for Adam, his SSF is 90 plus income tax of 314.62 plus 90, which is the PF, plus worker union dues of 36, giving us a total deduction of 530.62. Now, how do we get the net pay for the employees? Their net pay is the gross pay less the total deduction. So when we take the gross pay of Nelson, which is 3755, and we less the total deduction from it, which will give us the net pay that Nelson will be taking home at the end of the period. So we do that quickly. 3755 less 774.5, giving us a net pay for Nelson as 2980.5. And then for Adam, his gross pay is 2607 less the total deduction of 530.62, giving us a net pay of 2,076.38. So this is how we prepare the payroll for an organization, showing their various basic pay, any allowances due them, their gross pay, their taxable income, their total deductions, and their net pay. So I have done the first two employees for the organization. I'm sure you'll be able to do the remaining two. Then we are done with the payroll for Seekers Limited. If you have been following through, this is how your payroll should look like for all 4 employees, as you can see on your screens. If you have been following, or if you try solving it on your own, this is how the payroll for the 4 employees for the organization should look like. We go for a quick commercial break, and when we return, we will see how we can calculate or prepare the payroll for an organization where all the allowances given to employees are non-taxable. Welcome back from the break. Before we went for the commercial break, we look at how to prepare a payroll for an organization where the allowances given are taxable. We are going to look at how we can prepare the payroll for an organization where the allowances given are non-taxable. So I will leave the question on your screens for just some few seconds. As you go through, then we can start to prepare the payroll for an organization where allowances given are non-taxable. I hope you've gone through the question and you are ready to answer them. So this time round, we are looking at how we will prepare the payroll for an organization where the allowances given them are non-taxable. There are different treatments of when the allowances are taxable and when the allowances are non-taxable. The first illustration we look at was taxable. All the allowances and the bonus given was taxable, but this time around we are looking at when the allowances given is non-taxable. So let's look at the illustration on our screens. The information below relates to the earnings of 4 employees of Exams Enterprise for the month of April 2001. We have the employees as AC, Abena, Amil, and then Yaya. Then the number of hours worked per each employee have been stated. That is 315, 380, 450, and then 400 respectively. Then the rate per hour is also 380, 380, 500, and then 500 respectively. We go further. We have been given additional information. A non-taxable rent allowance enjoyed by all employees is 10% of basic earnings. We have the social security contribution is 5% for all employees. Health insurance is 10,000 per employee. This is not subject to tax. Abla and Yaya belong to the senior staff club and pay monthly dues of 20,000 each. Let's look at the requirements of the question. Income tax is 7.5% for all earnings above 100,000, 10% for all earnings above 200,000, and then 12% for all earnings above 300,000. You are required to prepare a payroll showing I, the basic earnings, II, taxable earnings, III, total deductions, and IV, the net earnings. So if you are ready, I am definitely ready for you. So we have to prepare the payroll for Exams Enterprise. The name of the organization is Exams Enterprise, as stated on your screens. So always remember to state the company's or organization name and the month you are preparing the payroll sheet for. So we have Exams Limited, we have Exams Enterprise, we have payroll for the month, okay. So we indicate the names of the employees, as in the workers. The first is AC. Then we have Abena, Amel, and then Yaya. So we state the names there. Abena, Amel, and Yaya. Okay, so these are the workers of the organization. We state their basic wage. You have basic wage or pay. And the basic pay from our first illustration we say is the number of hours worked multiplied by the rate. Depending on the question, sometimes you are given the unit produced and you have to multiply it by the rate per unit produced. Sometimes too, you are supposed to use the guaranteed minimum rate to calculate for the basic wage of the employee. But per our question for tonight, we are basing on the number of hours worked by each employee. So AC worked 315 hours and the rate is 380. So we multiply 315 by 380 to arrive at his basic pay. So 315 multiplied by 380 giving us 119,700. So we have 119,700. So I'll be solving for the first two employees just to demonstrate how we can prepare the payroll for the organization. Then I'll leave the last two for you so that we can work fast and answer a lot of questions. So Abner also worked for 380 hours and the rate was 380. So we multiply 380 by 380, giving us 114,440. So we have 144,400. Now we go to the non-taxable rent allowance enjoyed by all employees is 10%. So we look for the non-taxable rent allowance, which is 10% of all earnings of the employees. So let's indicate rent allowance, which is 10%. So we have 119,700 times 10%, giving us 11,970. And then Abner is 144,400 times 10%, giving us 14,440. SSF is 5% of the basic pay. We are bringing SSF here because we don't need the gross pay. Why? Because we are not going to calculate our income tax based on the gross pay, because the rent allowance stated here is non-taxable. So even if we add the rent allowance to the basic pay to give us the gross pay, we are going to subtract the SSF from the basic wage of the employee. So we go straight to the SSF and state the SSF given to each of the employees. And as I mentioned earlier, SSF is always calculated on the basic pay of the employee unless the question tells you to calculate it on the gross pay. So we are going to calculate 5% on each of the employee's basic wage that has been given. So we have AC basic wage as 119,700 multiplied by 5%, giving us 5,985. And then for Abner, whose basic wage is 144,400 multiplied by 5%, giving us 727. All right. Then we have health insurance, which is also a deduction but is not subject to tax. So we have to deduct it from our basic pay before we can calculate tax on the basic wage of the employee. Health insurance is a deduction, but once it's not subject to tax, it has to be taken from the basic wage of the employee before we can calculate the taxable income. So we have health insurance, which was stated as 10,000 per employee. You can see it on our screens indicated there. Health insurance is 10,000 per each employee. So we just indicate 10,000. You have 10,000 for each employee. Then now we can calculate for the taxable income. We have the taxable income. And the taxable income is the basic wage less all the non-taxable items. So SSF is non-taxable, and then health insurance is also non-taxable. We have to less them from the basic wage to get the taxable income. That is the part of our basic wage that is subject to tax. As I mentioned earlier, we didn't show the gross wage because the rent allowance is non-taxable. So if I even add the basic wage to the rent allowance and get the gross pay, I'm not going to charge the income tax on the gross pay. I'm still going to charge the income tax on the basic wage because the rent allowance that will sum up to the gross pay is not subject to tax. So we are taking our SSF and then our health insurance all from the basic wage to arrive at the taxable income. So we have 119,700 less SSF of 5,985. Then we less the health insurance of 10,000, giving us a taxable income of 103. $103,715. Then we go to ABNA. ABNA basic wage is 144,400. We less the SSF of 7,220. Then we less the health insurance of 10,000, giving us a taxable income of 127,180. The next item on the payroll is to look at the income tax. Right now we know the taxable income, that is the part of the basic wage that is subject to tax. So we are supposed to calculate the income tax on our taxable income, not on the gross. So let's look at the clause given for calculation of income tax. Per the first question we solved, we were given a straight or a flat rate for calculating income tax. But with this, we have been given a clause of which we have to go by. So we will have to go and calculate our income tax, then we add it all and then show it on the payroll table. Income tax is 7.5% for all earnings above 100,000. 10% for all earnings above 200,000, and then 12% for all earnings above 300,000. The earnings is not the basic earnings, but that part of your earnings that is subject to tax, that is your taxable income. So let's look at how we can calculate income tax. So we have calculation of income tax. So we know the taxable earnings of each employee. We have the taxable earning. Taxable earnings, as we have been solving for only the first two employees, I will demonstrate for only the first 2 employees. Then in your free time, you can do the remaining workers or employees. So the taxable earning for AC, we have AC here, and then Abena. The taxable earning of AC, is 103,715. So we quickly indicate that 103,715. And then the taxable earnings for Abena is 127,180. 127,180. So these are the taxable earnings. So the clause is saying earnings above 100,000. So meaning the first 100,000 of the taxable earning is tax free. So I indicate 0. We don't pay tax on it. So we are supposed to less the 100,000 from it, and we are left with what? 3715. So let me put, when we less the 100,000 from this, we are left with 27,180. So the next 100,000, that is earnings above 100,000. I'm sure when we were looking at the labor remuneration, you remember the payment by result have 3 different methods. We have the straight piece rate, the differential piece rate, and then the guaranteed minimum hourly rate. This is where we are calculating income tax using the differential method, as in if you produce from 1 to 50, you have a different rate. Above 50 also have a different rate. That's the same rules we are applying per the calculation of income tax. So the first 100 is tax free. We are not supposed to pay any tax on it. So we less this 100,000 from the 103,715, and we are left with 375. This 375 is earnings above 100,000. So let's look at the clause again. The clause says 7.5% for all earnings above 100,000. So the 3,715 left is earnings above 100,000, which will be equal to the 3715 multiplied by 7.5%. So we have 3715 multiplied by 7.5%, giving us income tax of 278.625. So our income tax is 278.625. And then when we take the next 100 for Abena, that is 27,000. So we have 27,180 multiplied by 7.5%. So we have 7.5%. Giving us income tax of 2,038.5. So we quickly transfer it to our table. Income tax. We go on a commercial break, and when we return, we will continue and look at how we can prepare the payroll for exams enterprise.